Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, kicking things off with a brief review of something you probably already know, and that is just that the market is very sensitive to these type of economic announcements, these events, like what we saw today, an hour before the cash open, through the GDP. So between that and the unemployment claims, it really did kick up the volatility in the markets. And that's part of why I like to review these each day before getting into the session. And that's where I have to bring your attention to PCE that's due up tomorrow. So that'll be out 1 hour before the cash markets open. Just like today, I think that could be a market moving event. So make sure you're aware of that. And then we have another one here that is 30 minutes after the cash open. Now these are just the revised University of Michigan consumer sentiment. So I don't expect them to be as much of a market moving event, but they can be. And it's one of those things where if you're not paying attention to it and you let the first 30 minutes of the day get by, it can be very easy to make a mistake in that moment. You know, let's say that for the first 30 minutes of the cash session, market is just rallying, everything looks good, you get your signals and decide to go long. Well, if you run right into that moment in time, that can be a reversal. And I just wanted to make sure that you were aware of it. Now after that, we can come over and take a look at what I think is next, which is, at the risk of oversimplifying this, I think that it's a fascinating image because I took this about a week ago and I had highlighted that the current pivotal decision was sitting right here at 6,600. Now look at where we closed today. We closed at 6,604. So obviously there has been a lot of movement over this past week, but then when you come back to the heart of it, it's just a lot of noise and chop around that big 00 value. Now as we get into tomorrow, and more importantly, as we get into Tuesday, right? Because Tuesday will be the last trading day of the month, and there are some implications around that expiration. That is when I'm going out with the calendar and targeting down here into the lower 00. As far as what is going to happen tomorrow, just know that the 6,600 is a very important above or below. I think you could rally to 30 or possibly 50 overhead. Those are going to be the two zones of resistance that I'm watching. Again, that could be on the board for Friday's trade, but then into Monday and Tuesday of next week, I think the market really is seeking out some of these downside targets. We'll cover a little bit more of that in the members video on simpler trading. But again, at the risk of sounding oversimplified, I actually think that's a very good looking chart that helps map out some of the decision zones that I'm going to be working on as we get into tomorrow. And then one other trade I wanted to bring you, which was here in NFLX. So NFLX is exhibiting one of the trades that I've been tracking, or one of the setups that I've been following more so here recently, and that is through an anchored VWAP pinch. So you're just taking two very clear points. In the case of NFLX, it is the low from down in here, and then the swing high. You know, I think we can all agree on that those are very pivotal points. You can see how it comes down into this, and I'm showing you these yellow squigglies as the area, in this case, of support, and it does a good job of holding that. The resistance may be just a little bit more sloppy, but you did hold the 618 retracement of the previous decline, and at the end of all this, I think you could see some neutral trade in NFLX. So one thing that I'm looking at is the sale of the $1,200 straddle in the front month, right? So you still have a couple of weeks for that. And to be fair, you know, there is definitely some ways volatility could kick up here. I don't really have great support until about 1160. So, you know, we know that NFLX is not going to sit here and be perfectly quiet. It could trade up or down $40, but then at the end of something like 10 days, maybe it's 7 or 8 depending, can you find that it's somewhere inside this range? Well, that's where selling the front month, you know, selling it when you've got 20, 30 days until expiration and then covering it 7 or 10 days after you put it on, I think could be a market making deal. Again, that's provided that we stay above this swing low, under this swing high, and that's one spot to be, like I said, I think short volatility, knowing we could have 1 or 2 kind of healthy dips, but then you look back at it in a couple of weeks, we're back in range, and that's one spot that I'm looking for some ideas. So I hope you find that helpful as you plan out your day tomorrow. You'll have a great rest of your week, and I hope to see you in the chat room on Friday. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.